Good afternoon, everyone, and welcome to today's webinar about how you can gain a competitive advantage in international markets through compliance, brought to you by the Institute of Export and International Trade in partnership with Payoneer. And why are we running today's topic? Well, Brexit, the climate, digitalization, and geopolitics, among various other things, they're all impacting how trade is done, and certainly the rules for it as well. The businesses that can demonstrate continued compliance amid ongoing change will be the ones that will be best placed to show their value in increasingly competitive global supply chains. In today's webinar, we will be showing how UK businesses in particular can do this, especially in light of post-Brexit rule changes and the UK government's modernisation of customs authorisations. My name is William Barnes-Graham, the Executive Editor at the Institute, and I'll be your host for today. And as you can see on this side, it's my delight to welcome three fantastic speakers today. First off, we'll be hearing from Payoneer's Country Manager for the UK and EU in Tosin Oki, who will be giving a recap of the new customs rules that have been introduced following Brexit. Tosin has a wealth of experience working in the lending and fintech space, and in a first for our webinar program is a former Olympian, which is pretty amazing in truth. So we're really glad to have Tosin with us today. Next up is Piero Pereira, the Strategy and Growth Account Manager at Avask, who will be looking at some of the other areas of compliance that businesses need to be keeping on top of, including VAT, plastic packaging tax, and extended product responsibility. Finally, the Institute's Matt Vick will round things off by discussing how the government's modernisation of customs authorisations will help traders to optimise their compliance procedures and the supply chain advantages this could lead to. Matt and Piero aren't Olympians, but we are nonetheless absolutely delighted that they can join us as well. Before we hand over to Tosin, though, we're going to run a quick poll on our next slide to find out a little bit more about you, our audience. So this one's asking, what impact has Brexit had on your competitiveness in international markets, ranging from very positive impact to very negative impact? While you are answering that poll, some housekeeping notes from me. Firstly, you can contact me with any comments or questions using the question panel on the control window, which is usually to the right-hand side of your screen. We hope to get to a number of your questions today, though please note we cannot guarantee we will get to every question in the allocated time. As such, I will be prioritising questions that have relevance to the wider audience, so I won't be going into company or sector-specific queries as such. Please also note that if your questions are short and clear, I am more likely to be able to read them. Finally, you will receive a recording of the webinar with a copy of the slides in a follow-up email we will be sending over the next day or so. Now, thank you everyone for responding to this poll, revealing I'm just going to share the results. So, I mean, this isn't hugely surprising, I suppose. A majority of you have said there's been a either quite or very negative impact, probably only 3% of you saying very negative impact. So maybe that's slightly reassuring. A third of you say neutral or no impact, and 12% of you say there's been a positive impact of some sort. Thank you everyone for responding so honestly there. But on the next slide, that poll certainly sets the scene for our first speaker in Tosin Oki from Payoneer. We'll be giving a recap of the major customs compliance requirements that have come in since Brexit. Over to you, Tosin.
Thanks very much, Will, and great to be here for this webinar with a great panel as well. So happy to go on to the next slide. So yes, we're all here to kind of talk about Brexit and the implications. And a few years ago, I guess now, the UK and the EU reached an agreement on the terms of our relationship, our trade relationship. And for the purpose of customs, the UK is now treated like any other non-EU country, as we all know. Next bit, please. And the changes that are going to impact you are really varied. But when you're talking about businesses that are affected, right, the typical businesses that are affected right now are anyone who sells goods or supplies services to the UK. Also, if you buy goods or receive services from the UK, if you move goods through the UK, or if you use UK materials and goods to trade under preferential schemes with EU partner countries. And I know that's quite a mouthful, and I put them all in one go. But essentially, anyone now who has any business relationship within the UK is directly impacted by this, which is why from a Payoneer perspective, we saw so many companies almost cease trading. And going back to Will's poll at the beginning, seeing how many of you are affected, that also makes a lot of sense. Next part, please. So in terms of customs declarations, that's majorly changed. So up until 2021, you could almost do the declaration sort of afterwards, but now you've actually got to make your declarations and pay your tariffs at the point of import. So this is when it comes to goods entering the UK from other EU countries. So before you were able to do it in arrears, and I think that's up to 2021, you could do that in arrears, and I think you had a few months to do it. Now you have to do it before the goods actually enter the country. There is some slight good news there, though. There is a simplified declaration that you can apply to do. Well, the only challenge with that is it takes up to 60 working days for that to come through. So if you haven't done it yet, that's definitely a few months that you'll have to wait for that to come through. But this is something you can apply for. So you can apply for a simplified declaration, which takes a bit of that sort of stress out of it, but it does take 60 working days. So that's worth bearing that in mind. On the other part, though, all goods have to have a valid declaration and customs clearance for them to come into the UK. So, don't ever think that it's going to be possible for you to be importing or exporting goods without that. That is a must, and your goods will get stuck and they won't be able to come in. And a very, very important thing that you have to, all of this is important, but this is super important. If you are using a third party, so if you're using a courier or maybe a freight forwarder, you really need to be sure, check their terms and conditions, because many service providers might be a little bit shady on that, but definitely check their terms and conditions and check who will make the declarations on your behalf, because ultimately it's your business and the liability is with you. So if the courier or freight forwarder doesn't do the declarations, then you still have to do those declarations. If they do, if you're fortunate they do those declarations, fantastic, then you're covered from that side. But that is super important. The last thing you want is a situation where you think it's with them, they think it's with you, and your goods get stuck. That directly impacts your customers and your brand as well. And final bit, in terms, the other major thing that's happened is the rules of origin. So for you now, you have to be able to prove that either the goods you import from the EU originate in the EU, and secondly, the goods you export to the EU originate in the UK. So it's both ways now. And again, it goes back to Brexit. You have to be able to prove that, and it's not just your word of mouth that is seen as proof. So currently, you need to either get a statement on the origin from the exporter, so you can do that directly from any exporter that you work with. You can also use the kind of importer's knowledge. Now, this is a slightly trickier one, where the importer is essentially saying, hey, I know that these goods originated here or these goods originated there. And then that's why I've got the final point, which is a supplier declaration. So essentially, the importer's knowledge is kind of half okay, but you might need a supplier's declaration as well at the time of export. So the supplier is actually saying, okay, I work with this importer and I can definitely say that the goods came from here or the goods came from there. So running through it all again, I know some of these things you're all aware of. Brexit's definitely impacted many of us who are trading in the UK, and it really doesn't matter whether you're buying, you're selling, you're importing or exporting, it's definitely going to affect you in some way in terms of the origin of the goods. Please make sure you're ready to do your declarations in advance of the goods arriving into the UK or you exporting those goods. Super important. You can apply for a simplified declaration, but it will take you 60 business days. So you have to kind of do that early and make sure that anyone who works on your behalf is on top of how you, or has a clear understanding of how you're planning to move the goods in and out of the country. There will be no excuses, or there's no space for excuses when it comes to that. If it's caught in the grey area and you're not sure, make sure you check the terms and conditions or give them a call. Super important. And be able to prove beyond reasonable doubt that you know where your goods are coming from or where they originate from. That's also super important as well. And there are sometimes spot checks where they'll ask further information. So you have to be ready to verify or re-verify the origin of your goods. That's a very simple 6-minute overview of all the changes, and happy to take any questions as well. Back to you, Will.
Brilliant, thank you, Tosin. That's a really succinct, but I think it kind of covered all the domain points really of post-Brexit rule changes in the customs sense. So that's a great overview there. Thank you so much for that. I think that sets the scene for this webinar quite well. So I'm going to just launch the second poll, which is just asking you how confident you are in your customs compliance procedures. Again, there's a scale there, very confident to not at all confident. And just while people are answering that poll, Tosin, thank you again for that overview. I mean, a question I'd like to ask personally is, Brexit has led to a significant number of new rules, as you just pointed out. But can you actually see any benefits in this? I mean, can a business's ability to demonstrate compliance, is there a benefit in that? Can it show their reliability as a supply chain partner in what is a changing regulatory landscape, not just in the UK, but globally?
Two parts to the question there, Will. And yeah, I think I can try and answer both. I think, yeah, many changes, and generally initially changes are not great because we're all used to doing things in a certain way. I think in terms of like verification of where goods come from and things like that, I think that's a positive thing. There's so many goods that are made in areas or countries where maybe the quality of those goods is not up to maybe what we're used to further west. So I think when it comes to those kind of things and just a general verification of goods, I think that's a positive thing. Then the flip side of that, or not the flip side, but a continuation of that, is where you are a service provider who excels here because your terms and conditions are really clear, and you state to your customers that, hey, I can offer a door-to-door service, a world-class service. If you are able to demonstrate that, that should put you ahead of the competition, right? So I think, with the supply chain issues that we've seen in the last year, 2 years, almost 3 years, I was thinking about the Suez Canal situation as well. Like, if you can show that you are world-class at doing that, there will be greater opportunity for you. So I think even with a bit of friction at the beginning, and I think many businesses have gone through that friction, I think ultimately there are positives at the other side, and those who can show that they are world-class at doing anything will always have the greater opportunity. So overall, I would say pretty positive.
Great, thanks, Jason. That's a nice starting answer, if anything, and it actually tallies quite nicely with the response to the poll. So, I mean, we've done this poll a few times over the last few years following Brexit, and it's really interesting that, in 2021, early 2021, when a lot of the rule changes came in, this would have been a very different response. But now we're seeing a vast majority of you are either very confident or quite confident. So 31% of you very confident, 53% of you quite confident. There is new friction and there's new rules always coming in. The target operating model of the draft of that got published a couple of weeks ago, and that's going to change things again for importers. So, there's still changes coming in, and that's maybe reflected in the 14% saying not very confident and 2% not at all confident. But I think it's a generally positive poll response. So thank you everyone for responding to that poll. Tosin will be back with us later on in the webinar for the Q&A at the end. But at this point, we're now going to, on the next slide, bring on Piero Pereira from Avask, who's going to talk about some of the other compliance requirements businesses are now facing. So Piero, over to you.
Hey, Will, thank you so much. If we go to the next slide, I'll present myself. My name is Piero, and I am the Strategy and Growth Account Manager here at Avask. If we go to the next slide, unfortunately, I'm going to have to talk to you about something that is the wonderful world of VAT, right? So there is a #1 rule that I'll always say. If you're planning on storing goods anywhere in Europe, you must be VAT registered in such country. So, for example, you are planning on storing goods for a longer term to sell your products in Germany, you must be VAT registered in Germany. There are two sides of VAT as well. When you're importing, you'll be looking at potentially at the import VAT side of things, and then you have the sales VAT that's applied when you sell the product to anywhere in Europe. So there are facilitators in terms of countries where you can import the goods from. You can import anywhere into the EU, but there are countries that have facilitated that, well, actually streamline the importation side of things. There are countries such as Netherlands, Belgium, Ireland as well, that have competitive schemes and called postponed VAT accounting that can really help with the cash flow side of things when importing goods. But instead of me going on so long about the VAT, which is not one of the most interesting parts of the discussion, I'd like to talk about what the opportunities are and how to kind of deal with this. So if you go to the next slide, there is a fantastic scheme called the OSS scheme, right? So before the 1st of July of 2021, there were distance thresholds, especially in Europe. So you as a business, even based in the UK, when the UK was in the EU, you had to track how much you were selling in each country because each country in the EU had different thresholds. Now, with the OSS scheme, if you are going to be storing, and you must be storing in one country in the EU, you can sell distantly from that country to any customer in the EU. By instead of having to apply for VAT in every single country in the EU, you can sell distantly by having what's called an OSS number. So as an example, let's say, again, we use Germany as an example because it's a great trading country in the EU. If you were to have a warehouse, for example, that's storing your goods in Germany, you have that warehouse doing the 3PL advisory and actually sending the goods to the final client. So myself, Piero, the client based in Italy, buys a product from your company, UK company, but that's registered for VAT in Germany, and the products are stored in Germany. When the sale happens from Germany to the final customer in Italy, Italian VAT is due. Now, you don't have to register for VAT in Italy anymore, but it will go under your OSS declaration, really facilitating all distance sales in the EU. One number, one registration, one compliance, and one filing system for you to sell distantly everywhere in the EU. If we look at the next slide, IOSS is the other part of things. So OSS stands for one-stop shop because it gives you the ability to sell from one place to anywhere in the EU. IOSS stands for import one-stop shop. It's that opportunity that some businesses may not have the need to store goods or may not want to store goods in the EU. But the IOSS scheme actually helps you import the goods from outside the EU, let's say in this case the UK, in the post-Brexit world, from the UK straight to a customer in the EU. The only difference is that the IOSS does have a threshold, which is about at 150 euros per product that you sell. So as soon as you go over that threshold, all of a sudden you are having to deal with VAT, import VAT side of things, and actually having to pay duties on the sale of the product. As soon as you're under that 150 euros, all the client has to do is actually pay a fee for the product, which will be a VAT that you actually file and on a monthly basis in whichever country you're registered for an IOSS number for. So it's two different schemes. One is when you're storing within the EU, one when the product is coming from outside the EU. Both have perks, both have cons. I'd say with the IOSS, it's not necessarily the best for regular shippers that are having a higher volume of sales in the EU, whilst the OSS, especially in a consumer world where we are constantly waiting and wanting products to be delivered as quickly as possible, that OSS option becomes a very, very viable option. If we look at the next slide, these are the two good requirements that you need in order to ship, first of all, in the EU. So wherever you're shipping to, it's ideal that you have an EORI number, first of all, because that's what you need for the customs clearance, as Tosin already covered. The EORI number, you only have one for the whole of the EU. So it doesn't matter where you end up shipping to, as soon as you register for an EORI number in the EU, you'll be able to cover that movement of goods. The VAT number becomes really important, especially if you're storing goods, as I've already mentioned, but it depends on when you're importing, whether you're paying import VAT on these costs as well, because that's going to take a huge chunk of your movement of goods out. As you said, in a pre-Brexit world, there was a free movement of goods. Nowadays, when you're, as a UK business, you are importing goods into Europe, you're either having to go through a country that facilitates the import VAT cost, or you pay import VAT in advance. That can be between the ranges and percentages of 20 to 25% that upfront. That can actually really damage a company's and a business's cash flow, because if you're not VAT registered, first of all, you will never be able to reclaim that back. If you are registered for VAT in the country that you're importing into, you will have to claim. You can claim that back, and you have facilitators that can do that. However, there's going to be a waiting time and a waiting period, and each country has different waiting periods. So You don't want to lose 20% of a large shipment for that period of time. That's going to really damage your cash flow. If you go into the next slide, I'm reiterating what Tosin said about having someone that actually helps you with the customs clearance. There are two types of requirements that you have nowadays when importing into the EU. Direct representation is for EU companies. They're already legally set up in the EU. It's just helping the clearance. You still have someone doing the clearance, but you already have the EU business that can actually put their address down and show that when the products are coming into the country, they are basically taking charge of, and they are going to be the importer of record in this case. Indirect representation is for any business that's not based in the EU. You might ask me after this whether it's easier to have a European company or a non-European company when importing to the EU. Obviously, the first is much easier. However, it doesn't necessarily mean it's a requirement for you to have an EU company to import into the EU anymore, because the indirect representation can be done by most custom clearance providers in the EU. If we go into the next slide, I'll start introducing what is EPR. So it's something that I want to stress is how the consumer is kind of changing. What the consumers are looking for is changing. So EPR is an eco policy, an environmental law that's been launched a while ago actually, but it's now fully introduced in Germany and France, and many other countries are going to introduce over the next few years. It's mainly done for the packaging side of things. I'm going to cover plastic packaging later on in the UK as well, but it's a policy that was created to make a manufacturer and a seller of goods really think about what is it that you're producing and actually selling out there. It's a clear trend towards businesses having to think about the effect that the product they are selling makes. It's very important that you start thinking about the amount of packaging that you're using, the type of packaging that you're using on the product, and also the type, and most importantly, it's actually the life cycle of the product that is essential. If you are planning on selling a product that has a continuous buy and is environmentally not one of the best products out there, that is really going to affect your EPR costs and your EPR contributions. So let's say a great example that you have in France is if you're selling like a Christmas jumper that has a lighting tool on it with batteries involved as well, you would have to register for textiles EPR policy. You'll have to register for the WEEE, which is for electrical goods, because you have an electrical component to the product, and actual battery registration as well, which can really take that contribution quite high. So you have to start really thinking about the product that you're putting out there. If you go into the next slide, I'm going to look into the plastic packaging tax in the UK. The threshold is still quite high because you do have to bring in and import into the UK over 10 tons of plastic packaging on your product to actually register in the first place. And then it's an incentive for you to really think about, first of all, weigh the product and the amount of packaging that you're using, and plastic packaging you're using on the products that you sell. But it's an ideology that really pushes the idea, okay, what are my alternatives? What else is out there? And it is a must that part of your plastic packaging from now on is at least 30% made from recycled products and recycled plastics. So it's a trend that we've seen that really changes the ideas on how you want to sell the products and the type of products that you want to sell. So I believe that's it in terms of the slide. So back to you, Will.
Perfect. Thank you, Piero. Perfectly on time as well. And that was a few really significant rule changes covered in a short slot. So thank you so much for that presentation. Really thorough. I'm just going to share our next poll. Just asking you, and this is ahead of the next section of the webinar, is are you planning to use customs authorizations or special procedures? Now, the options there are yes, we already are. Yes, we have been planning to for a while. Yes, we have been planning to since the spring budget, and there were some important announcements made in the spring budget which impact this. No, you're not yet planning to, and no, they're not a benefit to us. So I'll let that run for a minute or so. just while people are answering that, Piero, really interesting to see how new rules around extended producer responsibility and plastic packaging tax have come in over the last couple of years. And of course, there's ESG more broadly impacting businesses as well. And we've had a question from Martina, who says, to what extent is the environment becoming the main area of new compliance requirements for businesses?
Yeah, I would say I think not just as consumers, I think as citizens of the world in general, I think we are very aware of what's going on in terms of wastage and the use of plastics. The main consideration to be had, whenever we buy a product, there's packaging on it. Packaging always goes to waste, unless you find a DIY sort of way of kind of reusing it. Packaging is the one that always goes to waste. So it is an incentive, and I think on a terms of brand image as well for your business, it's an incentive for you to actually show that you're really producing something that doesn't impact the world and the environment as much. So it's not just from consumer needs, it's also from a manufacturer's point of view. I think there is a massive trend for you to really show and really think about the product that you're producing. So I think there is a massive trend simply because the EPR legislation will be launched in Spain. It will be launched in the UK as of next year, and I can imagine that be launched in a number of countries, not just in the EU, but any other country in the world as well. It is a trend that's going towards that, and it wouldn't surprise me if it's a standard regulation until that the recycling of plastics is a lot more let's say widespread and actually used on a thorough basis. But yeah, that rule, that taxation will be expanding quite a lot over the world.
Thank you, Pierre. It's really interesting to see, how taxation and compliance is really driving what could be really significant behavioural changes in this area. So from what you're saying, it's something just starting, it's going to become more widespread. So businesses should be trying to get in on this as early as possible, really.
Absolutely.
Great stuff. Well, on that note, I'm going to close the poll. Thank you again, everyone, for responding to it. So really interesting, 47% of you already are using customs authorizations. 11% of you have been planning to, and only 2% of you have been planning to, particularly since the spring budget. So that's interesting in itself. But there's a fair few not using them yet. 9% of you saying they're not benefits. 31% of you saying no, but maybe you might do in the future. Who knows? But this is a really interesting scene setter for our next speaker on the next slide, who is Matt Vick from the Institute. And Matt's going to say a little bit more now about customs authorizations, and he will be tying things together a bit as well by saying how these authorizations can help businesses to optimize their compliance in order to hopefully get a bit of an advantage over their supply chain competitors. So Matt, over to you.
Perfect. Thanks, Will. Yeah, thank you to everyone for answering that poll. It's very interesting to see that as we go ahead into this section. So it's actually very nice to see that a majority of you are already using authorizations or strongly consider it if not already. So just bear that in mind as we cover this next part. So earlier this year, there was obviously the spring budget, or the March budget, if you want to call it that. And it goes without saying that due to the circumstances around the UK especially, most of that budget was focused on the immediate addressing of the cost of living crisis and various measures like that. However, there was a series of customs-specific announcements in it, and overall this forms a wider pattern of the government really trying to address the root cause of what is, to be honest, the UK's really quite sluggish growth, and they think it's productivity, it's admin, basically admin burden, especially when it comes to trade. They feel that in consultation with industry, they've really taken on the view that they just need to make this as easy as possible while maintaining border security and such. So what we're going to cover on the budget today is the custom specific parts. I will focus on the authorizations. However, the IOE did do a different webinar following the announcement of that, and there was also more written pieces. So if you want a bit more detail on the wider measures within the budget, you can absolutely look them up at your own leisure if you wish to do so. But next slide, please. So in terms of what we want to look at today, these are the main 5 things that were covered in the budget that were really of interest. Now, it should be sort of borne in mind that Some of these were concrete announcements, and in some cases, they were the government committing to do reviews of these certain aspects. So just bear that in mind. I will go through what was concrete versus what wasn't. Just when it comes to things like changing standard declarations, which I'll get to in a second, that is a review. So just be clear on that distinction. Most of these measures, in terms of timelines, the governments are looking to implement or at least start these reviews towards the end of this year. So we're going to start to see a lot of acceleration in how things change. Now, I say that as if that hasn't already been the case in these last few years. We had a couple really decades where there were only really major changes 2 or 3 times that you could be aware of. In the noughties, we did have 9/11, which brought about the AEO safe framework, basically. And in the 2010s, obviously, we've then had relative stability, the Union Customs Code in 2013. And then, of course, we get to 2016 onwards with Brexit. And the amount of changes we've had in that sort of 6-7 year span has been, I appreciate, very difficult to keep up with. But it will keep changing, updating. We are obviously forging our own customs policy, and this all forms part of that. So specifically as to what was in the budget, there's a very interesting one which relates back to what Tosin was mentioning earlier a little bit. Voluntary standards for intermediaries. Now, at the moment, there's no formal requirement in the UK for any customs agents or anything like that to have a qualification or degree or anything specific to trade in customs. It's basically something you can just do without a real standard to hold yourself to. And that's what there was a consultation last year, and this is one of the things the government's announced. They intend to bring forward a voluntary standard for intermediaries to follow. We'll get more details supposedly, quote unquote, later this year. So we'll see on that, but it's supposed to improve or basically standardize the level of service across the intermediary sector. So if you're a trader that uses multiple agents, or if you're an agent yourself, it might be that there will be something to really keep an eye on there. The second thing is improvements to simplified procedures. Now, again, we've touched on this earlier today. It's a separate authorization you have to apply for. But what the government wants to do with this is just make it a little bit easier to both acquire that authorization and then actually use it once you have it. So all of these, when it comes to authorizations, this whole umbrella, the government basically wants to reduce the admin and digitize that authorization process as much as possible to make it a lot more straightforward to people to get those authorizations. But I'll come on to that in just a moment. But the simplified procedures themselves, the government's looking to expand the aggregation scheme within it. So at the moment, you do have the option of doing, for instance, a frontier declaration for each consignment, and then you have to do supplementary declarations by, as it stands at the moment for imports, the 4th working day of the following month. So if I were to import something now under simplified procedures, I'd have until the 4th of June to do the supplementary entry. What they're going to do is extend that timeline to the 10th, or in some cases the 11th. And also what they want to do is make it so this aggregation scheme, at the moment, you either have the option of daily aggregation or over a 10-day period. They're going to give you the option of doing it over a whole month as well. Just bear in mind that will mean that you need to keep a record of everything you moved in that month, because you will need to do the follow-up entries. So it's not just a case of, it's easier in the sense you'll be doing fewer entries, but you need to maintain those records. Transit, we can't go into this one in too much detail because while the government's announced a few things they want to change with transit, quite a bit of what's changing with it is sort of international, because NCTS 5, the system that governs transit basically, is due a major update towards the end of the year. So the government's looking to make it easier for authorized consignor and authorized consignee status, but any specific measures, like for example, NCTS 5 includes such a thing as being able to use a digital TAD, transit administrative document, where at the moment you need a paper one. But again, that's not what was announced in the budget. That's NCTS 5, which is a separate thing. So we have to kind of disentangle those two. And now these last two are the major ones I want to get onto. So guarantees. Now guarantees, the government immediately post-Brexit made it a lot easier to get, for instance, deferment accounts, because they gave you a waiver of, I believe the figure's up to £10,000, where you didn't need a customs comprehensive guarantee in order to get a deferment account. They effectively want to expand that and make it so that there is a lot less requirements for guarantees across the board for most of the customs special procedures. So that's their broad ambition on that, to make it a lot easier, reduce the admin and reduce the cost that businesses have to invest in order to actually get these guarantees, which in turn means you're allowed to then get the special procedures. So this is a major one, and it will affect pretty much all of the other points to some degree. So that's a big one that'll be a lot easier, I think, and one of the government's stated intentions is to level the playing field a bit. They don't want smaller or less frequent traders to feel they're at a disadvantage, and to some extent, this guarantee waiver really helps those smaller businesses. But the big one, and there's a reason we've got an umbrella as the icon, is the modernizing authorization scheme that they're introducing. So at the moment, there are, by the government's own count, about 42 separate authorizations that you can apply and acquire. They want to narrow it down to effectively 5 main ones with a 6th just off to the side. I'll cover that in just a moment. They're basically going to group it by, they're going to have a group for AEO, so Authorized Economic Operator. You can expect to find the AEO-S and AEO-C authorization within that. There's going to be one called Fiscal, which, as far as we can tell, will probably include things like deferment. There's going to be one called Simplifications and Declarations, and that's going to be the main one, which holds most of the special procedures, and I'll focus on that in just a sec. There's one for transit, and there'll be one for what they've called ports and wharves. So the 6th one off to the side is excise. They're keeping it somewhat separate, which is kind of fair. It's due to the nature of the goods, it requires its own monitoring. But the really big one there is simplifications and declarations, because the idea is that traders will apply for an authorization for each group. And as soon as you've got the authorization for the group, you have access to all of the facilitations and measures within it. So taking the customs and declarations one, basically the idea is that you apply for that group and you have access to customs warehousing, inward processing, temporary admission, whatever you might need. Whereas at the moment, you would have to apply for every single measure separately. So going back to that 42 different measures that the government reckons they've got, effectively you have to do 42 authorizations applications, and they want to really strip that down and make it a lot easier for people to access these things. So if you move on to the next slide, please. The great analogy, to toot my own horn, I think of in that sense is that they want to make it a toolbox. So having access to these groups and everything within it will give you a lot more flexibility as to what you can actually do with goods. So to put that into a little bit of a scenario, let's say you initially bring some products in from a third country like Taiwan, and initially, you're just going to temporary admission it perhaps because it's going to go back out for whatever reason. Well, it could be circumstances change, and instead you now need to keep those goods in the UK for a bit longer. I realize it's very topical. I say circumstances change when using Taiwan as an example. That was accidental, I promise. But it could be you need to use a different authorization to hold those goods, and you don't want to pay duty and VAT for goods that aren't going to stay here ultimately. Well, under the present system, if you only had authorization for temporary admission, you would have to figure something out. You'd either have to apply for customs warehousing now and wait, as we mentioned, 60 plus days for that authorization to come through while you've got goods sat in your storefront or whatever it might be. Or you'd have to try and use an agent and perhaps use their customs warehouse. But what this grouped or umbrella authorization process will allow is, because you've applied for the customs group, yes, you can use a temporary admission, but you can also use customs warehousing. You could also use inward processing. You could use any of those. It gives you a lot more flexibility as to what you do with the goods without needing to do a separate application for which you have to wait potentially months. So again, this is all under that umbrella thing of trying to make trade a lot easier and a lot more straightforward, especially for smaller businesses, because you don't want to sit there forever applying for different procedures, because a big problem at the moment is you apply for one procedure and that data is effectively lost. You have to apply a lot of the same information if you ever apply for another procedure. It's not shared. That's one major thing they want to change. It will be grouped. You'll get a lot more shared data, and the authorizations and application process will be streamlined. So next slide, please. And that brings us to this. So really the ultimate point of, okay, so why does customs compliance actually matter then? The obvious rule generally applies. You don't want to get in trouble. That goes without saying. But with these new announcements and with a few other things taken from the budget and the new target operating model that has been announced, your compliance history could become effectively way more important than it ever was. So in the past, and to a degree in the present, it's still important, as we say, to avoid trouble for audits and so on. You need a good compliance history to get current authorizations, like the current inward processing, current customs warehousing, and so on. But as we move forward, we're going to expect to see a lot of things called trusted trader schemes. You might have heard this term already. It should be noted that there isn't generally going to be one overall trusted trader scheme. There could be a series of different ones for different elements. So from what we've seen, there will be a trusted trader scheme for GB Northern Ireland, potentially, one for SPS, which is sanitary, phytosanitary goods. There'll be one potentially for more broad customs arrangements, which is more what we're looking at here. But they will be looking at your previous compliance history, your current written procedures and the basically resilience of your organization. So what you don't really want to have is one person in a whole company that knows all of the custom stuff and there's no contingency if they fall ill or anything like that. You need to make sure you have robust processes, and that is just as, if not sometimes more important than previous compliance. So for newer businesses, if you're a bit worried about that because you think, I've not been trading that long, I don't have a huge customs history, there are ways around that. The government will sometimes look at business plans, your financial health, and a few other aspects when deciding to grant you things like authorizations. But as we move forward, you will really want to get these trusted trader status, because the government's whole aim is to make legitimate trade easier, and they will monitor that through these trusted trader schemes. And one big ambition, I suppose, that they've got is that if you're a trusted trader, you will be able to dramatically reduce the amount of data you have to put in each entry that you do. In some cases, you might not need to do an entry at all if it's from the same supplier, same country, as many of your previous consignments. So if you want to really improve the administrative efficiency, as it were, of your business, you will really want to look at these trusted trader schemes. And to do that, the best time to be making sure you have good customs compliance and good processes is the past. The second best time is now. I recommend you start looking at it. And it's just puts you in good stead for the future, which, as we've mentioned, things are changing rapidly post-Brexit. The government is setting out and the UK as a whole is kind of figuring out its own place now. And this is really going to be the bedrock from which you can take advantage of any future schemes. So do strongly recommend that. But that will conclude my section. So with that, I will hand back to Will.
Terrific, thanks, Matt. And that is a really important point at the end. We're going to come on to another poll in the Q&A in a second, but I just want to pick up on that because, I mean, trusted trader scheme seems to be a really important cog of the UK's approach to trying to make things easier for businesses. I mean, when I hear trust as a kind of concept in this sense, it doesn't blow my mind, but I'm always slightly surprised by the use of the word, for example, because trust seems like such a soft thing, but it sounds as though the government's really going to put it at the heart of its kind of compliance system. So, I mean, I guess trust is something which is earned. What is government going to want from business to earn this trust, and vice versa as well? What can businesses get out? What can governments do or UK government do to get businesses' trust in these processes?
Yeah, I think it's a difficult question, and it's why there's been so many consultations on this. The government is repeatedly engaging stakeholders and different industry views because they kind of want everyone's view on what that looks like. But overall, for the government, what they are looking to do is kind of a transaction. They're basically saying, look, we're going to make this application process a lot easier. There's going to be this thing called a single trade window over time, which is effectively you put the data into one place, all the government bodies can access it. It stops you having to duplicate your own information submissions. They're going to have, as we mentioned, digitized and streamlined application processes in general, reduce the guarantee. So what the government's basically saying is, like, they're going to dangle a really big carrot in front of people and say, look, we'll make it so much easier for you to trade, potentially reducing your customs declaration requirements and so on. But in exchange, we want to see from you, the traders, that you've got a strong sort of security or safety net within your company of written procedures. We want to see good compliance history, which can look like it's the little things like at the moment, just make sure you're reviewing your entries at least once or twice a year, pick up on any mistakes, voluntarily acknowledge and notify HMRC of those errors to correct them. They would generally look on that stuff as, okay, these guys have a process evidently, which has meant that they've caught this error, and it means that we can trust them a bit. I suppose on a larger level, the UK can do as much of this as it can. It will inevitably require cooperation from other countries to a degree as well. You cannot fully digitize an import, because for every import there's an export, which means it's leaving another country. That presents its own challenges. So there could be some slightly different treatments from region to region. We will see. Overall, most countries that are part of the WTO have committed to facilitation agreements and things like that. So we will hopefully see in the next decade or so a lot of changes there. But yeah, the government's core message is prove your compliance, trade legitimately and honestly, and we'll make it as easy as we can for you while eliminating and catching any bad actors.
Terrific. That's a very comprehensive answer. This is something we'll be keeping a real eye on even over the coming years, because this is very much at the heart of the UK customs and trade. So it's something the Institute will be engaging with fully. I'm just going to run a poll now. So this is before we go into the Q&A. would like to say thank you again to our event partners today, Payoneer, who've helped put on this webinar today. And I just wondered, Tosin, would you like to say just a little bit more about what Payoneer do and how you support businesses?
Yeah, of course, Will. I think from Matt's point around compliance, I think that's super important to register that, because any service provider you use should always be fully compliant. And good segue into thinking about Payoneer. We're FCA regulated and regulated across the globe in terms of when it comes to moving funds and money movement. So we're an e-money institution. So essentially, when you're thinking about all of your cross-border or cross-currency transactions, Payoneer is the perfect company to utilize to do that. And we also allow you to have a card as well, so you can make transactions via a credit card or a debit card in multiple currencies, not just in pounds. So it should save you significant amounts on FX transactions and help you do VAT payments as well. So good option, fully compliant option as well. So if you are looking at making international business transactions, think about Payoneer as an option. Thank you.
Terrific. Thank you, Tosin. And we'll bring back Piero now as well for the Q&A. I'll leave the poll open for just a couple more seconds, and I'll just ask another question while that's open. We've had some really good questions actually, so thank you everyone for sending them in. Just one just come in from Jenny. So this is going to be from Matt, and Jenny just asked, kind of, where can we find more information about the trusted trader schemes?
I suppose the straightforward answer from that is direct from the government. The thing to be aware of, I think I've alluded to it a couple of times. In some cases, these things are, shall we say, ambitions, and we've not had the full details yet. A primary example of that is the Northern Ireland and Windsor Framework one, where they've announced the intention to do it, but we've not seen the full detail. However, if you look at the government sites, for example, they do have a published article on current trusted trader schemes and the ones announced in the budget and target operating model. But just be aware that we'll get more actual concrete information as we go, because most of these are either at consultation stage or sometimes even a little bit further back than that. The single trade window is a bit further along, and it will be a big part of the trusted trader scheme. But yeah, if you want really nitty-gritty detail on exactly what will be required, the harsh answer at the moment is we don't fully know, but expect it to be along the lines of what things like AEO authorization may require, but perhaps a little bit easier, because AEO is quite an onerous application process. So I hope that answers. I know it's a bit vague, but the truth is we're all kind of waiting for a bit more detail there as well.
And it should be said, yeah, the Institute will be continually posting updates for this daily update and through the webinar program as well. I'm going to close the poll now, and you'll see on the next slide, but we're very much in the Q&A section now. One back, thank you. And just to, Susan asked, is there any webinar available to gain access to regards of good compliance procedures? I posted a link to a webinar we did last year on preparing for a customs audit, which should have a decent amount of information there about general best practice on compliance, including things like record keeping, what to do with HMRC. We're going to check your books tomorrow, all that sort of stuff. So hopefully that's a good useful starting point. Basically all of our webinars, well, not all of them, but a lot of our webinars are about compliance. So I'll post a link as well to our channel on YouTube, where you can see all of our previous webinars, and hopefully there's useful stuff there. And it's a topic we'll run a session on in the future. Righty-ho, into the questions. Just to bring back Piero, we've had a question in from Annetta, who says, when would you recommend using IOSS compared to registering for an OSS number? I think you touched on it, but yeah, could you answer Annetta's question there, please?
Yeah, absolutely. I think, as mentioned, it's so important. It's all dependent on how your business actually works, and it's all about volumes. So as a UK business, most of your business is operating out of the UK, and that's a vast majority of your trade. You want to make sure that you have as much stock of your products as possible in the UK. In that case, you want to use the IOSS, and you have to make sure that that product is well below the 150 threshold. So when you're selling high luxury products, you definitely cannot do IOSS. So it has to be a product or a type of business that sells products and services that are well under that threshold of 150 euros. Now, if you are seeing a massive trend in the EU for your products because of the marketing campaigns that you're running, if it's a product that actually suits other cultures and other product and other consumers as well, then you start thinking about the storage option in the EU. When you're storing in the EU, then you need that OSS number. Best thing, you don't have thresholds. You can sell, you know, a different range of SKUs, different range of products, whether it's luxury or non-luxury. It gives you that great opportunity to really have that base in the EU without having to register a company, have your own accountants, you know, just one service that kind of covers all those EU sales. So yeah, I'd say that's the main difference.
Terrific, thank you, Piero. We'll do a few questions quickly, just conscious we've got a few good ones in, so let's try and get rattle through. A question from Evelina, it's going to be from Matt. So Evelina says, can you advise if current simplified authorization holders, such as for inward processing or IPR, actually I think it might be something else, IPR, will they have to apply for the umbrella authorization or will it be granted automatically?
So the way they've worded it, we think it will effectively be granted. So what I think they're going to do is effectively publish a new authorization process, but you'll have an option of saying when you've already got one, and it'll probably make it so it's pretty quick. So effectively, if you think about the chain or the information you'd have had to submit to get your IPR or whatever it might have been, they're looking for more or less the same information. So if you've already done it, I think what it will be is that you apply for this umbrella authorization, give your IPR authorization number and a few other bits, and I think that'll make it a lot easier. Again, we're waiting for a bit of concrete detail here, but they fully acknowledge that people that already have these special procedures will not want to go through the whole thing again, no matter how much easier the new process is. So they've acknowledged that. I think it'll be fairly easy, such as these things are, for you. So I wouldn't worry about really duplicating everything you've already once done.
Good stuff. Thank you, Matt. I hope that's helpful, Evelina. Question, a really good question has come in from Rachel, and it speaks to a point I think Tosin raised earlier, and it's around kind of intermediaries. So Rachel says, most of our customs compliance is handled by our brokers, but how can we ensure that their procedures are as compliant and efficient as they ought to be? And I don't know, Tosin, do you want to start on that one and then we can extend it to the panel?
Yeah, of course. I mean, definitely, I think asking the right questions. I think we all know what the current regulation is right now, and I know Matt said it's constantly expanding and updating, but definitely asking the right questions and assuming nothing, doing the right due diligence there. And then I guess further on to that point, it's really around making sure you've got the fail-safe, you've got all the documents ready if the off chance that they don't tell you the truth and it actually falls on you to declare it, because essentially it's always going to be your responsibility anyway. But happy to pass it on to Piero, who probably has more.
Yeah, absolutely. I'd say, funnily enough, is the velocity of how I think the longer the products are stuck in customs or taken to actually get to the final destinations, the more questions you as a seller and as a business you're going to start asking yourselves. So in terms of what you're actually looking for is all about the details, the minor details. If you have a broker that's doing the indirect representation and taking joint liability of the goods, it has to be their address that is represented, their EU address that's in the customs clearance. So it's just those minor details that you really have to look into. But yeah, the timing makes a massive difference. So if you can see your demurrage charges go a lot higher than usual because the products are stuck, is either you're under inspection because the customs broker's not done something or you've gotten the HS codes wrong. But having that regular update and having a service that is willing to speak to you whenever you might be thinking that you are facing that sort of issue, that's a massive step for you to actually have that security when you're importing goods. So yeah.
Terrific, thank you both. We'll move on to another question. This will be one for you, Piero. It's from Marion, who says, in what other countries is EPR being launched? I think you mentioned Spain earlier, but yeah, do you want to?
Yeah, it will be Spain, Poland, UK. Most countries in the EU will adopt it. I'm sure Italy will come along with it as well. It's it will be widespread in the EU in the next I'd say 3 to 4 years. So yeah, next one will be Spain and the UK.
Terrific. I hope that's helpful. Marion, a question from Tristan, and it touches on something you said, Matt, which is, will businesses need to access the single trade window, or will they continue to access it through their brokers, like with CDS?
Bit of both. CDS is sort of like the perfect analogy. With the CDS financial dashboard, for instance, each trader has their own, and then each broker has their own. Single trade window, it's primarily intended to benefit traders, but it will also be there for agents. So if you're using an intermediary, they will also be able to use their own access through that window to submit the data. The government bodies can look at the information and use it from there. We should point out, of course, that the documents in one place isn't the only feature of a single trade window. It does have other systems to it. Some of it is cooperative with other countries, but for the most part, each company that wants to make use of the STW will have to basically use it. But accordingly, that just means that an intermediary can do it for you. It's almost exactly like the CDS financial dashboard situation. I don't know if they'll have to do a separate authorization. Again, it's not out yet. We're getting there towards the end of this year. Hopefully, we'll start to see something more concrete on it. But yeah, at the moment, I would assume it's more or less on the same basis as with CDS. You can both access it. You can both use it. If you want an agent to use it in your stead, they can do so. But just keep an eye out on what's announced.
Perfect. It's, as said earlier, it's an ever-changing landscape at the moment with systems as well as the regulations. Quickly from Isabel said, will we be getting a copy of the webinar? Yes, all registrants will get a copy of the slides and the recording. And just one last one from Harry, who's asked, what advice would you give in terms of how long to keep records and documentation relating to our supply chain? How long should we keep records and in what format? Sorry, actually, Piero, do you want to start on that one, and then Tosin and Matt will be welcome to join.
Yeah, from my perspective, it's dependent on actually how often you're going to change the product, and I think on the method of delivery as well. I think there's changes whether you're doing parcels and air freight compared to massive containers through ocean freight. So there's still those differences. So in terms of keeping that out, I'm actually not too sure. I'll probably ask for someone else in the panel, but from it does depend on how you deliver, but I would say keep a log, definitely.
I would go with what Piero said. I think that's the short answer for me, but I think as long as possible. It does depend on the method, but for as long as possible, the last thing you want is to be sort of asked further questions and you've shredded all your documents. I mean, that wouldn't make any sense. So I'd say at least probably 3 to 6 months, just as a general record, unless you're planning to change the products you're importing quite regularly, which probably doesn't happen that much.
Matt, yeah, from an audit perspective, it's a bit longer, is it?
Yeah, so from a customer's perspective, the general rule of thumb on all documents and all trails is 4 years. When you get onto special procedures and things like that, it can go as far as 7 years. We are at a bit of an awkward spot where we're starting to digitize most of the documents required in trade. So when we say what documents do you need to hold, obviously most people jump to thinking physical documents and filing cabinets. That's starting to shift, though, to a degree. They're starting to accept more digital copies like PDFs. The difficulty there is, of course, you need to make sure that you have a robust filing system for that as well, which can be a central server at the business. It can be the third-party software you're using for your whole supply chain. It might have a document storage facility, but unfortunately, we're still at that crossroads where physical documents are still needed in some cases. So, yeah, the general rule is 4 years for your general any entries you've done, your commercial invoices, your packing lists, etc. But if any of those entries relate to a special procedure, think as potentially high as 7. I think this is one of those that is due to change potentially as we go forward. There was a acknowledgement that record keeping especially is more arduous in smaller businesses because of space limitations, and 2, because of the cost if they have to take out separate storage. So it's something the government's aware of as a problem, and they will be looking to address that.
So Matt, are you saying for now buy a big storage unit and rent it out? That's what you're saying?
Well, a lot of people have to. The rule of thumb, so for instance, if you're doing an AEO application, is it needs to be a place that is secure and locked, i.e. padlocked, and only a couple of people know the combination. It needs to be weatherproof, dry, that kind of thing. So yeah, you can take out a separate storage. It could be within the office. You can go and buy a container, an airtight container, which would be very thematic. But yeah, at the moment, unfortunately, still need some physical docs. But again, we're in that period where there's new legislation going through Parliament, which we've talked about, the Electronic Trading Documents Bill, and a few others, which will make it so that you hopefully don't need those physical storages anymore. But fingers crossed that happens sooner than later.
Terrific. Again, that's something we've got our eyes on, the Electronic Trade Documents Bill. We're going to run a webinar on that once it passes through the Houses. It's still in the Lords, I think, at the moment. It seems to have had a slightly prolonged journey through the Houses of Parliament, but it's something we're keeping an eye on for sure. At this point, we're going to have to start wrapping up, though. We've had some great questions and some great presentations. So I'd like to say thank you again to today's speakers in Tosin, Piero, and Matt. A lot of information there, but I hope we've been able to put compliance into a context where it's not just something you have to do, but also an opportunity to stand out against your peers. Before we go, on the next slide, just a quick plug of an event the Institute is running in July. MemberCon is the Institute's main member-driven event, featuring a world-class lineup of industry leaders, alongside the Institute's excellent experts, including Matt, of course, covering all things customs and trade, as well as being a great opportunity to network with your fellow exporters and trade professionals. It really is a great chance to put your trade and customs questions to our experts, particularly via a series of Q&A clinics that are going to be taking place throughout the day. It's taking place on 5th July in Liverpool, and you can find out more details on the website. On the site, you can also find more details about our future webinars, including a session we're running with Alibaba next week on research they've conducted into the challenges faced by exporters in the UK and practical guidance on how businesses can overcome these hurdles. Again, you can go to the website for more information about this and all our webinars. That's export.org.uk. A reminder, we will be sending the slides and recording of today's webinar in the follow-up email, which you should get in the next day or so. Please do get in touch if for any reason this email doesn't come through to your main inbox. But thank you again, everyone, for joining us on today's webinar. As you leave, please do let us know what you thought of the event and any suggestions for topics in future webinars by completing the short exit survey. But for now, goodbye, everyone. Bye-bye.